Hello everyone. Today we will talk about Valor Estate Ltd and their June 2025 quarterly results. This is a real estate company mainly focused in Mumbai and their numbers this time are quite interesting. If you look at sales this quarter, the company reported 840 crore compared to 537 crore last quarter. That means sales grew sharply up about 56% quarter on quarter. And compared to last year June 2024, sales have jumped over 12,000% because that base was very small. So top line looks very strong this time. But when we look at expenses, they also increased heavily. Total expenses were 870 crore, which is actually higher than sales. This means the company spent more money than it got. That's why margins are under pressure. Employee costs are very small, but material and other costs are eating up the revenue. Because of high expenses, operating profit came at a loss of 30 crore compared to a 23 crore last quarter. If we see operating margins, they stand at -4%, meaning for every 100 rupees earned, the company lost 4 rupees at the operating level. So even though sales went up, profitability did not improve. Now, if we see the other income, that's where the surprise comes. The company earned 75 crore from other income this quarter. In fact, the other income has been helping the company in many quarters, sometimes even covering up for operating losses. Coming to the most important part, net profit. This quarter, the company reported a net profit of 14 crore compared to a loss of 2 crore last quarter. Last year, June 2024, net profit was negative as well. So this is a positive swing, but it is mostly because of other income and not because of the core business. After seeing these numbers, sales are growing strongly, which is good, but expenses are very high. So the core business is not profitable yet. The company is depending a lot on other income to show profits. This is not a stable model because other income can fluctuate. If core operations don't improve, future quarters can again show losses. Investors should keep an eye on how much profit is coming from real business and how much from other sources. So, in short term view, results may remain volatile, sometimes positive, sometimes negative, depending on other income. But for the long term, the company needs to bring expenses under control and improve margins in its real estate projects. If that happens, growth can be sustainable. Otherwise, profits will remain patchy. If you see the risk, company is highly dependent on other income and also company is having negative operating margins. Of course, real estate sector is cyclical, depends on demand and interest rates. So overall, sales have jumped massively, but profits are mainly supported by other income. What do you think? Is Valor Estate on the path to real growth, or is this just accounting numbers for now? Let me know in the comments.